joining us for a look at a few he's got his eye on. Scott, welcome. Another week with focus on retailers. We've been watching Nike as dust settles from quarterly results early in the week. But before we get into NKE, I saw Shoe Carnival's in the process of, well, kicking up some dust of their own to new highs today. SCVL, they reported quarterly results after market close on Wednesday. Fiscal fourth quarter EPS of 52 cents, more than double the EPS of 24 cents a year ago. You can see why investors like the fit on this one.
Yeah, you just summed it up. I mean, you talk about maybe the picture perfect sort of earnings report that gives an incredible outlook to an incredible forecast. This really hit the mark. Top line growth, margin expansion. It's been few and far between that we've seen companies really in any space, especially retail right now, give a very positive outlook, which they did. So yeah, stocks trading at all-time highs. The stock's in no man's land. You look at technical indicators here, there's nothing up there, Ben. It's in no man's land. So, if you're going to get into something like this, you have to really just buy into what management said. You have to look at the fundamentals there.
Yeah, Scott, I'm not sure how closely you looked at the report, but I'm curious if you did and if you saw any real improvements in terms of digital e-commerce, because that's a major focal point. And this is one of those stocks I associate with, strip mall type presence and brick and mortar type more so than anything else. And we all know that hasn't really been, as hot recently, and certainly wasn't that hot a year ago.
And definitely on the lower end of things too. But yeah, the digital side of their business was just, they blew the doors off any and all expectations. And that's what you're seeing as a response to the market there.
Okay, a little bit of a different response to earnings than we saw from Nike. Now, I did see Nike got upgraded to outperform from neutral at Baird. Can you talk to us about what you're seeing here in terms of NKE? Because they actually sold off in reaction to earnings, but they weren't that bad either.
Exactly. And you really have both sides of the coin here. So on the earnings print, they said, sales growth was negative over the holiday season. Inventory levels were spiking. However, management reaffirmed their aggressive growth outlook for the year, and they boosted profitability for 2021. So, the results were disappointing, yet the outlook was very positive. And if you go back, Ben, to their last earnings report back in December, they even talked about how the next few months, the next quarter could be really bumpy due to COVID. We certainly saw a top in the stock after that December earnings report around 146. It's hit there, once or twice since, trading back down. However, though, this drop back down that we saw here came right down technically to the 200-day moving average. And that has been incredible support for this stock. And it held again there.
All right, I like it. It gives us a key level to watch into next week. Let's move on because it's not just retailers in focus this week. And actually, it seems like we're on our fifth or sixth week of talking retailers at this point. Housing, though, another ongoing conversation that's been a part of the discussion for weeks, if not months. It's been a strong part, a pillar of strength amidst the pandemic. It's been a good week for home builders, Scott, to say the least. Lennar, we've got Pulte, DHI, LGI Homes, DR Horton. I mean, talk to us. The list goes on in terms of new highs. And this is even with rates at multi-month highs.
Yep. Yeah, pick your spot there, right? I mean, the overall sector continues to be incredibly strong. Some of the names you just mentioned, Lennar, up over 10% this week, while the rest of the industry not quite as much. It's hard not to like that stock, but I would certainly wait for a pullback. Let me tell you the one that I really like, and you mentioned it, was LGIH. The reason I really like it is they're a builder that is really focused on entry-level homes, so maybe the lower end. And if rates continue to tick up, that may be the area that has the most upside going from here. So I really like LGIH. DHI, similar to Lennar, I don't like the outlook quite as much. Pulte, lagging the others, but Pulte, PHM, is one that could be poised for a big breakout. And the reason I say that is they have a forward PE of just under 8, I think, while the rest of the industry average is about 9. So it is trading at a discount to the rest of the industry. So the two that I really like out of these home builders, which continue to be strong, are Pulte and LGIH.
How about if you just blanket the whole industry and you take a look at ITB, Scott, and some of the movement we've been seeing up there, just shy of $70 this week?
Yep. No, you absolutely can do that. If you didn't want to get into, a specific stock or two, I do think we could see some mixed results, though, moving forward from here, if rates continue higher. If rates have kind of, topped out a little bit, no reason why the housing boom across the board can't continue, though.
Okay, let's stick with this theme. Home Depot and Lowe's joining in terms of some of this momentum to the upside.
Sure. Oh, yeah, they've both broken out. Home Depot broke out around above that 290-ish area, which had been resistance. It's now at all-time high. Watch out above. There's nothing up above here. So I love Home Depot. Lowe's pretty much a copycat. You overlap the two, and you see very, very similar, patterns here. I do like Home Depot a little bit better.
All right, Scott Bauer taking a look at a few retailers, a couple home builders, and, well, Home Depot and Lowe's joining in terms of some of the enthusiasm to the upside. Scott, really appreciate you joining us here and sharing part of your Friday afternoon with us. Ladies and gentlemen, Scott Bauer is the CEO of Prosper Training Academy. You can check him out there. We're going to